start the recording. Now, if you didn't know, if you ever can't get into Discord, the simulcast backup is happening. It lags a little. The audio's not as good, or the quality's not as good. But if it's something, right? So if you ever can't get in and you want to watch live, you can just pop over to YouTube, go to our channel, get into the live. Bingo, bango. Excellent. Hello, Billy Ray. Good to see you, my friend. Love it. Let's go. Welcome to the Market Watch Group. This is our trading foundations. These are the working sessions. Why do I call them working sessions? Because way back when, we would actually go through formal presentations. We did a couple of cycles on our trading fundamentals series, or trading foundation series, and we did a couple of cycles on options. All of that is available to you. I'm going to show that to you here in a second. I'm going to spend a little time. We have this broken up into two parts. We're going to go until about 6:45 my time, whatever the 45 is where you are. Take about 5 minutes, and then we'll get back on for another 40, where we'll, just kind of resume. But we're going to do what we've been doing, and we're going to keep it basic and intro level. We're going to make sure we're really, touching all the fine points in this first part. In the second half, we might go into strategies or different things, a little more advanced. That's the agenda for now. I do want to talk about trading plans. I do want to talk about record keeping, just simply because it's ongoing. I'd love to talk about trades. We're going to pull up XLE because that's one that's on. We're going to talk about FAST because that's one that's on. But if you have a trade, if you have a trade you're in, if you have a trade you just closed, if you have a trade you're thinking about, and you're willing to share, and right, some people get a little bit like, oh, I don't want to share my trade. Everyone's going to be like, oh, what were you thinking doing that? No one's going to think that. We don't judge trades here. We learn from trades here. That's what we do. Right? And the old saying about there are no stupid questions. I disagree. A stupid question is one that goes unasked. That's stupid. You have it in your mind. Ask it. I'm not calling you stupid. I'm trying to encourage you to ask your questions. Get some dialogue going here in the community, in Discord. Today, Miguel said, is this the right place to talk about a trade? The answer is anywhere is the right place to talk about a trade in our site. Anywhere. Put it in there. Whatever it is. It'll pop up. Start a discussion. Whether it's about a chart, whether it's about a specific trade, whether it's about a strategy, what doesn't matter. You are in a safe place, surrounded by like-minded traders, and that's a rare thing to find. And we know that, and that's why we're very specific in how we've cultivated it and how we're going to maintain it. But I definitely, Steven's been around for a while, talked about, what is it going to look like when we really start getting that interaction, and we're seeing it. Steven, do you agree? I think we're seeing it. Okay, let's hit it. My name is Scott. I'll be your host. It's really kind of like a best friends club, if you think about it. I mean, I don't want to be presumptive, but I do now consider you all part of my best friend club. And I fully expect that to be reciprocated, of course. Disclaimers, be careful. We know the drill. Be careful. It's on you. You know what you're doing. You know how to control risk, or at least you're going to learn. Lee, were you on a trip? Are you back? Were you marrying somebody? One of your daughters getting married? Tell me what was going on. Something was happening. Let's go talk about this platform. Lee, you need to come to the cocktail hour and catch us all up on what the hell's been going on. What about that? Okay, this is that one I've been showing. If anyone hasn't seen that, it just happens to be up. This is job openings. And this is one that they keep talking about because they're like, oh, it's dropping so fast. It's the worst it's been in 3 years, is what they say. 3 years. If you did marry your daughter, congratulations. I hope it went well. I swear that's what happened, but I could be wrong. If I'm way off, I apologize. If I'm way off, I apologize. This is 3 years ago. We were at the highest it's ever been. Of course, it's come down considerably from there, right? Of course it has. Now we're down here, but look at down here compared to 2019, right? 2019, 2018, that was good times. Was anyone trading in 2019? Great year for trading. Fabulous year. Interestingly, it was one of those post, it was just like that last little bit before the pandemic. So you, you think back fondly. Okay. But yeah, I don't see this as weakness. I see that as a return to normalcy, right? A return to normalcy. Yeah. Okay. Let's keep going. Let's keep talking about it. Throw out what you think we should be talking about, and let's make sure we touch on it. I just want to kind of like, let's just catch up. We haven't talked since yesterday morning. Consumer confidence came back better than expected, right? Better than expected right there. Home prices have stabilized, and job openings were actually stable. I don't see. I mean, that's the thing, right? Yesterday, if you read the news, they were like, oh, not yesterday, today. What did they say today? It's in here. My days blend sometimes. I saw something about it. They're like, oh, it's starting to show weakness. It's not. I disagree still fundamentally. And I'm really like making sure that I'm not succumbing to some sort of a bias where I want it to look a certain way. I recognize what it's done. I recognize the context that led to that. But if you look at the economic calendar and what we actually received, we were expecting 8.1, which would have been a drop from 8.23. Why is my mouse jumping around so much? Here. Would have been a drop, and it was a little drop, but not as much as expected. We're still expecting ADP to come in tomorrow at 150,000, which is stable. If we were at 100 or less, I would expect like, ooh, we're going to start shrinking if we're not keeping pace, right, with just normal attrition. Then we keep coming down. I need 3 weeks above 270, 260. 3 weeks. If I get 3 weeks above that, then I'd be like, oh, you guys, our next monthly, oh, geez, I dropped my keyboard. Our next monthly non-farm payrolls could be ugly. We don't have that. And in fact, as we look for our next non-farm payrolls, where am I? Nope, that was last time. Here, ADP, and now non-farm is expected at 185. We were at 200 last time. We're expecting unemployment at 4.1. This is the big one this week. Nope, working on trading plan and the foundations. Oh, sorry. I thought you were on vacation. In my mind, you had a beautiful trip. Fabulous. You were on a beach somewhere probably, drinking a cocktail. It was amazing. 4.1. If it hits 4.2, it is not consequential. It is not consequential. What would but the market, the market media, Yahoo Finance, Market Watch, CNBC, Bloomberg, right, whatever. It's now programmed that when we hit 4.2, that's more than 50 basis points higher than the low of 12 months. And that is a recessionary trigger. 12 out of the last 12 or 9 out of the last 9, which, again, even when they're like, oh, well, 12 out of the last 12. I'm like, I'm sorry, you said your sample size is how many? 12? Okay, come on. We don't have to be mathematicians or statisticians to know that 12 is not a very strong sample size, first of all. Because how many of those 12 occurred in a market where the reference point of 12-month low wasn't just the 12-month low. It was the all-time historical low for the indicator. Never been as low as it has that time. And now we're saying, hey, if it gets a half a point above that, we think that's it. We're in a recession. No, not for me. Don't listen. We're going to hear it. I promise. You're going to see. My prediction is going to come true. That's something we should be focused on. Let's talk about today, though. Let's talk about today. I still think Bank of America looks like it's setting up. We've come down. We've held above the 50. This old level right here looks good. I think that looks good. I'm still thinking, yeah, we have trades coming. Citigroup's already moved. As has what was the other one? AXP. Yeah, let's go to the market first. Let me get back to 6 months. Okay, so how are you trading? That's the first thing. How are you trading? Now, that's a loaded question. Under control? That's a good answer. Under control? Trading well? I'm trading well. How are you trading? We talk about the professor and the chimp and the computer. And there was an interesting part in that book where they said it's actually quite easy to know when the chimp's in charge. Right? We're always talking about keep the chimp away from the keyboard. How do we know if the chimp, the illogical, the irrational, the fearful, the panicky, is in charge? Ask yourself this question. How do you feel? And then follow it up with this question. Is that how you wanted to feel? Right? Meaning, are you controlling that? Did you establish that? It's a good series of questions to do a very quick, in control assessment. PayPal had good earnings and jumped. I mean, it's tough. You guys know I'm not going to trade the earnings, spectate them. What did the market do today? We tested down at this low. We tested down and then we rallied all the way back up. Now, let's zoom in a click or two. Volume. Volume was 46.8 and average is 46.6. So that's not an above average day. So it's not an above average day. And I also want to point out that the sellers failed. They were down here. Then the buyers got it back up. So a lot of that was late momentum. And we said, what are we looking for here? We're looking for this to move and maybe hiccup. And we've got to be really ready to trade these along the way, expecting that the next move is coming out of here, right? Or else, if it does come out of here, you're a spectator. You're just going to watch. And I think to myself, well, we're bullish enough that we should be more than a spectator. Let me show you this real quickly. This will be new for some of you. This is our weekly posture. Every week, where'd my posture go? I'm like, wait. This is our weekly posture. Every Sunday, what we do is we go and we analyze the market. There it is. And we score it. And we have 6 different components that we score. Each one is scored individually. We don't let them bleed into each other. Objective analyses. And this scores our market for us. And you can see the total is a 10, but we really never get above or below 7s, right? That's kind of when you're like really cooking. So, between 1.5 and minus 1.5, that's kind of your neutral. 1.5 to 3, minus 1.5 to minus 3, that's your slightly bullish, slightly bearish. Anything above 3, we're bullish. Anything above 3, we're bullish. When we're 5, 6, 7, we're more strongly bullish. And you can see, back here in July and in June and in May, strong. Even in May, when the market went into a little bit of a consolidation, we never really dropped out of bullish. We went to slightly bullish for a minute. That's where we are right now. Is we've diminished for 2 straight weeks. We've diminished, but that doesn't mean we think the sky is falling. We're still 3.75. I'm still, hey, this is a good bullish market. A lot of that was volume. As that volume starts to dry up, that's gonna start to ease back and move towards buyers. The volatility. We'll go look at the VIX. We'll see what that tells us. But I feel good. And I feel good enough that I put bullish trades on, and they're both still on. Let's take a peek at those. Questions, comments, or concerns about anything we've said so far. So again, if you've missed, one of the things that we've been doing is we've been correlating this market to a couple of previous. So we're saying, what does this look like? Well, right now it looks like this. That was what we were looking at. That was comparative to when the market dropped to about a 2.75 or so, right? Like this. Those look very similar. This was like 5% and this was like 4.7. That's how close those two were. Now, before that, you can see it's barely showing now, the start of it over here. But you'll notice we had a 4% drop here. And then it went up a little bit and it never got back to the old high. So you can see that on these other ones, it keeps taking them out, right? It takes out that high. So that's something that we're looking for, especially in this area. So right now, as this comes up, yeah, I'm thinking to myself, if this is going to look like this one, that's the start of the next good bull move. Okay, I want to be ready for that. What else might happen? Well, it might go up for a little bit, like it did way back there, and then drop. And then it dropped 5%. And then it went up about 2%, and then down another 5% there. And when you add that all up, what did we get? We got a 10%. Right? Down 4, up 2, down 5, up 2, down 5. That's your 10. And then all of a sudden, if you want to know what a V looks like, V is for victory. Boom, boom, that fast. And then it had a breakout. That's it. Good to go. And then at that point, we were bullish and we were trading, right? So that was by when? That was by about the middle of November, we're saying, maybe even early November. Okay? I just want to give you an overview of how what we do works. What does it look like? So if I go back to November of last year, you can see what happened. My posture dropped all the way to a 0.5. And then by November 5th, I'm a 1.25. I'm now at the bullish end of neutral. By November 12th, I'm a 2. Now I'm slightly bullish. By November 12th. November 12th is on this 12th, we're more bullish. The next day it broke out. Are we trading that breakout? Hell yes. And everything after that. And we rode this whole bull market. Then we had a correction, and then we rode this bull market. Or a consolidation. And now what? Well, hey, this might be it. And if this is it, I'm ready to go. Yeah, give me your thoughts. Let's keep going. So this is the VIX. Miguel feels it. He's like, yes, let's trade. Do we have setups? Yeah, I'll walk through the watch list here in just a second. Let's look at the VIX though, right? This is a big one for us. And actually, I would say it's a bit concerning right now. Why? Because it's further escalation. You can see it's not just going up, but it's you see how this is like a broadening pattern? How it's like an alligator's mouth. It's opening, it's broadening. That's escalation. We've been concerned. If you remember, we talked about it's never a bad time to hedge when the VIX is at 12. It wasn't an automatic hedge. If I had a higher low in this scenario relative to this one, that's automatic. I'll put a hedge on like that. I don't even think about it. And if I don't have bullish trades on, it becomes a speculative trade because I have enough confidence in that particular signal that's derived from the VIX. But you can see this thing has been escalating. Now, we have to keep perspective and remind ourselves that 20 overall, as bad as it looks here, is quite low. In a worse market, VIX will easily get up into the 30s or 40. What did it get to in the pandemic? 80, 85, 85. And that was insane. Just utter madness. So what is this telling us now? Well, the problem right now is we really keep an eye on peaks and troughs. I'm going to change this to blue for this. So we have I'm going to make it a little thicker. We have this, and then we actually had this little one, and then we had this one. Then we had this one. Then we had this one. Then we had this. Now you can see it's fast right now. Look how fast this is cycling. Bing, 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 bing. And right now it's showing a higher low. If I had a hedge, which I've had one still, I would keep it. I'd still want to be hedged. This is concerning. It's also appealing. Because I know that if this comes up and it moves a little bit and then it rolls over, that is a lower high. And that's actually quite a bullish signal. Okay, now we know what we're looking for. So over the next couple of days, if this market doesn't sell off, right now the sellers tried, they didn't do anything today. So if this thing just sort of sits for a couple of days and then rolls over and the buying starts coming back in, that is bullish. That is like not we're already bullish in our market posture. It is a bullish signal of de-escalation. This VIX is representative of institutions. They move the market. And if right now, what this is telling us is that the institutions it's their fear. When they say a fear indicator, nobody cares. Nobody cares if we're scared. Right? Nobody cares. They care if the institutions are scared because they're the ones who move the market. How do we know they're scared? If they buy puts. Now, if you or I buy puts, we're not going to influence any implied volatility on SPY or SPX. But if an institution starts buying puts, it looks like this. Because when an institution buys puts, they don't buy 3 or 4. They have to buy a lot. And if one is, there's a good chance a few are. So all of a sudden, there's a huge surge in order flow. On what? Not on the VIX. On SPX, the index options. Because most institutions some track other indexes, but the most widely tracked index is the S&P. That's why it, for me, is quote unquote the market. So if an institution's going to hedge, they're not going to go buy puts on 400 different stocks, 200 different stocks. They're going to hedge with the index that they benchmark against. Every index, if you go look, or every mutual fund, if you go look at their prospectus, will tell you, this is our benchmark. This is how we measure ourselves. Right? So, there it is. Now what? So now, if the institutions are like, ooh, this market's looking a little soft, what are their potential courses of action? They can't just start selling things. They're an institution. They have 20 billion, 50 billion, 100 billion in assets. They're too big. If they start selling, they're going to adversely impact the market. So what are they going to do first? Well, the first thing they're going to do is hedge. They're like, I don't like the way this looks. A lot of people don't realize, but institutions can buy options, not to speculate, but to protect. We buy them to speculate. They buy them as insurance. And so as an institution starts buying it, now imagine you're a market maker. You're just right for weeks. Look at this. You're just like just moving along, not a lot of action, and then all of a sudden, now we pay attention to that right there. We say that's breaking the consolidation. You could actually even draw this down for a downward. Either way, it's breaking at the same point. Breaking the consolidation. Well, that means something is happening. What's happening? The institutions just had a surge of put buying. We know because the market makers are quickly raising their prices to a point that they hadn't in weeks. And you can see that from that first area, it's only gotten worse. Okay, so it's escalated. Now, once we make sure that we consider the perspective, the context, and we think, well, it's still below 20 and 20 ain't so bad. Then we start thinking, well, now I'm looking for de-escalation. Let me back this up a little bit. So you can see the concept of de-escalation here. That was attractive. You can actually see it over here. Boom. That one. I'm gonna draw a pink line. Right, probably a little back from there. Right in there. And right in there. And I'm gonna go to the SPY. And let's see how we would have done. Do we like that signal? Do we think, yes, I think that would be a market I would want to trade in. Woo. What gave us that? A really nice VIX confirmation telling us that it was just a little, it was just a blip, relax. That's what we're looking for. Okay, thoughts? That was my big reveal. You remember that show Extreme Home Makeover, and they're like, move that bus. That's my big reveal when I look at the VIX and then I switch it to the SPY and it looks like magic, because it is. Where's Glenn when I need him? Glenn's like, I don't know about the VIX. And I'm like, Glenn, I'll convince you that the VIX is magic. It's there could be dark forces at play. I'm not 100% sure. I just don't ask questions. But there's magic in this indicator. It is an inverse correlation, Miguel. 100% correct. 100% correct. And it's funny because you'll hear people and you'll say, what do you know about the VIX? And they'll be like, oh yeah, the VIX, it's kind of like a put call ratio. And then you remember, wait a second. Scott says anytime someone describes something with kind of or sort of at the beginning, absolutely do not listen to what they say after that point. Right? It's kind of like this. Nope. It's not at all like that. It has absolutely nothing to do with a put to call ratio. It has everything to do with order flow and increased demand. And it's recognizing whose demand is doing that. And it has just as much strength the other way. So the de-escalation is what we're looking for right now. You can kind of see what we were looking for in the blue. So right now we're saying, hey, if the VIX, gives us a lower high, we're thinking that's going to give us a signal right there, just like these other ones did. Okay, is the VIX, I know it might be brand new for some of you, and you're like, wait a second, Scott, you said this was the beginner's class. I know, but the VIX is so critical to what we do and how we look at the market. Because remember, and this has changed. When I started 25 years ago in trading, we commonly referred to institutions as 80% of the market. It's now 90, right? 90. And people think, oh, what chance do I have? And I'm thinking, I love that. I would be fine if it was 97 and it's like we're the 3% resistance, la resistance. Because the institutions are slow. And slow creates opportunity if you're fast. That's our advantage. So, right, I believe to be successful, we should be able to be very succinct in describing how we expect to succeed. I coached soccer, both of my kids in soccer growing up. My son is now about to finish he's going into his senior year in college. He plays at the Montana State University. But coaching them, it was an interesting thing because I believed you could assess the quality of a team by just pulling a kid aside in practice and say, hey, how do you expect to score goals? If they don't know what they're doing, they're going to give you a kind of sort of answer, right? And if they know what they're doing, they're going to be in a system that works. They do it over and over, right? And I think that's how I want my trading to be. This is why. This is my advantage. This is how I'm going to press that advantage. This is how I'm going to see the opportunities that come from that. So, yeah. Okay. Let's talk about. Anyone have questions about context? Like, do you feel like it helps trade when you have a better sense of overall, just like what are the conditions of the market? I always believe that's, again, it's 80 to 85%, right? We know that all boats rise or fall with the tide. So let's look at the boats we've been looking at. Fastenal was one, right? We look to put this on coming out of this turn. Oh, it's slow, but it's still going. It's slow when the rest of the market's doing what? Nothing. So yeah, what do we do with it? We slowly watch it, protect it, and look to see what comes next. XLE. Now XLE, depending on if you tried an intraday stop, it could have picked you off. Miguel did not. He stayed with it. Great hold. You can see this thing is continuing. If you look here, we never closed below. We did come down, but we never closed down there. So these both are look very strong still. They still look like they're in the momentum stage. Okay, real quickly, I'm going to pause for a second. I'm going to come over to... I'm going to pull this over. This is my Discord. We're down here in the Market Watch meetups. I want to point this out to all you newies out there. Trading resources, group downloads. Now all of this, beginner's corner, ask a question, suggestion, discussions, chat. That's all about different types of trading. But this is for you right here. So you can see here we have a content library. If I click on that, that's going to take me in and you're going to see all kinds of different videos. Videos about our trading plan, videos about the market posture, videos about trading foundations, videos about options. You can join our YouTube channel where you get the be sure to like and subscribe. If you subscribe, you'll get notifications. That's where I go upload the videos. And down here, you'll notice this new series I worked very hard on, this 6-part video series, Placing Your First Stock Trade, which is obviously a necessary precursor for options. These are quicker than a lot of like the other videos that tend to be like 40 minutes. When we're recording sessions like these are a little longer. These are like 12 to 14 minutes, really highlighting what we're trying to do on a trade by trade basis. You can see choose a stock, prepare, execute, manage, and after the trade. The other thing, if you're new, is go to your downloads here because you need to get a trading plan. You need to get a market posture log. You need a stock log. You need an option log. All of this you need. You can go get the historical market posture so you can get caught up. And you can come in here and get the current watch list, the group watch list, which we're about to go through. We might not get through it before our break, but we're just going to take a quick 5-minute break here in a little bit and transition to the second half because I know some people are still coming later. So we want to have a little bit of a formal transition. Let me know if you have any questions about that. But what I would challenge you to do is just pop around. And as you pop around, say hello. Say hello, introduce yourself. People are doing it. It's amazing. Great energy. We really want to maintain this energy of an openness, willing to discuss trades, to share knowledge, etc. Okay, let me move this back and make sure I'm seeing where we are. Okay. Is review of the market a daily event? That's a great question, Bob. So not in the context that we do our posture, right? The posture, we look at like sector rotation over multiple time frames. We look at major market over multiple time frames. We look at a 3-year weekly chart, right? So some of that stuff, I don't really care. But and if I were to show you, let me show you two things. First, let me show you, this is our trading plan. And you can see here, we have market forecasting, which leads to our market posture. That's our overall. What are we overall? How do we see the market? What sectors are good? What's the overall volatility? What are the trends? Then there's the trading posture. That's the day-to-day. So there's not a specific, like, I'm going to assess it with a score, but the day-to-day is going to be much more informed by support and resistance. You'll notice we didn't talk about support or resistance. We talked about trend. So, right? So trend is the overarching strength, and support and resistance are the waves up and down. Well, the waves up and down are what we're trading. So those do become much more important to us in our trading posture, right? So if I'm bullish, we have a basic bullish philosophy. Find a bull market, buy the dips. Well, we're in a bull market. So what does buy the dips mean? Well, if it's dipping, you're expecting it to bounce. If it's bouncing off of what? Support. So every time it pulls back to a support level, we think, ooh, good time. Because we think it's going to do what? Bounce to the next high resistance level, because that's what upward trends do. Now, they don't always do that. Sometimes they do. Sometimes they only get to the previous high and it does a little stall sometimes. So essentially, we have to trade towards an end, but we recognize the need for fluidity and to adapt. That's our be water mentality. So I would say that your trading posture, Bob, is going to be dictated more by the routines. So for example, I hate when I do that. So for example, our before market routine, what are we going to be doing? We're going to be looking at the futures. We're going to be looking at the charts for where are we relative to support and resistance, coming close to one, bouncing off of one. We're going to be looking at the trades that we're in and how they're doing. So that's a lot more granular. And I think that's what you mean. But so there, you will have a routine, but you won't have a scoring process. That's just the weekly, like, it's just such a nice mechanism. I mean, this goes back, I've taught this or a variation of this for probably 15 years now. And I would run into people after not having seen or heard from them in 6-7 years. And they're like, I still do my market posture every week. And I'm like, me too. We're still market posture best friends. Once and always. So I think that you'll find that your before market and during market is going to be your... do I put out option trades also? Yes. Right now we've had a little bit of a desire to build a stronger onboarding process for new traders. It was very easy for new traders to come in and feel overwhelmed, and we didn't want that. And so over the last, 2 or 3 months, we've had a strong push towards that. And so there have been more stock trades. But remember, a stock trade is a foundation, right? It's just a foundation. So any of those stock trades could easily be converted into an options trade, where you just say, oh, he's giving me a target. He's giving me a stop or at least a stop range. I give you the range because you might want to be a little more conservative and give it a little more room, or a little more aggressive and have a better reward to risk ratio. Right. So that's that. There's some flexibility in there so that these can easily be translated into an options trade, right? Buy an option or buy a bull call spread. Bob. Yeah, I don't think the plan's changed much in 5 years. I don't think it's changed much in 10, to be honest. Probably like 10 to 15, there was still some good evolution going on, but it's been in its current versioning for the most part for quite a while. Okay. Yes. So, where were we? Day-to-day routine. So that's where we're at. Let's do this. Let's take that quick 4-minute break, and I'm going to stop this recording and then start a new one so that I can keep the two differentiated. Otherwise, it's a really long video. Maybe even right now, PJ, like we can go build I'm thinking about a trade on BAC. So when I'm thinking about it, I can start setting the trade up now. I can start thinking about what would the option trade be. So let's do that. We're going to go through the watch list. When we come back from our break, we're going to go through the watch list. We're going to pick at least one. We're going to go through a stock setup, and then we're going to talk about how would we translate that to an option. We're going to use the Thinkorswim platform. That's the model that I'm on, so be aware of that. So, okay. Let's take that break. I'm going to put my mic on mute so you don't hear me getting up and going to refill my water. But we'll be back here. Let's call it. We'll call it 4 minutes. 8:51 Eastern time. See you in a few.